હવે ઉજ્જીવન સ્મોલ ફિનાન્સ બેંકના મેનેજમેન્ટ આપણી સાથે જોડાઈ ગયા છે. એમની સાથે વાત કરીએ. બેંકના MD અને CEO ઇત્તેરા ડેવિસ. ઇત્તેરાજી, welcome to the show, and first of all we'll take your comment on asset quality that has been improving. Any further stress that you see on it?
Good afternoon. No, the asset quality has been continuously improving after the COVID situation was behind us. And right now, we see further improvement in the days ahead because the economy is still strong, and we are seeing the benefit of a growing economy, which is helping these stress levels.
Sir, restructured book is at 2.26% of loans. Any pain that can come from there?
The restructured book is doing well as in terms of the recoveries, and we are able to see that both the first stage of restructuring as well as the second, and the second is doing much better. So overall, I think we still are expecting more to come by way of that. There's a 88% collection right now on the restructured book.
Okay, and so next question will be on disbursals that are robust, aiding in loan growth, particularly quarterly run rate on disbursals that can be maintained.
Yeah, I think we are now for the last 4 quarters, the disbursements have all been above 4,000. In fact, 4,300 is the lowest. The last 2 quarters have been closer to 4,800. In the remaining 2 quarters of this year, we will definitely be able to keep that momentum going above the 4,000 level.
Okay, and net interest margin, sir, is at 9.8%. In rising interest rate scenario, till when do you see a yield aiding in net interest margin improvement, and by when do you expect cost of funds to kick in and impact NIMs?
The cost of funds, we expect some marginal increase in cost of funds, but not significant. We have increased our deposit rates, and that will obviously play out in that front. But we don't see the net interest margin falling anywhere below 9.5%. In fact, we hope it will average slightly better than that. But 9.5 is what we have built into the business model.
Okay, and sir, any further outlook on loan growth and particularly credit cost going ahead?
The loan book, I mean, the overall growth that we have given indication to the market is 30% year-on-year growth. So that is what we continue to maintain. And overall recoveries will continue in the way it is, although it may be slightly lower in the next 2 quarters because some of these recoveries are, some of the provisions are a bit old, beyond 365 days. But I think we will continue to see some good collections in the last 2 quarters of this year.
Okay, and any further fundraising plans, if you can share?
No, we have completed our fundraising. Fortunately, we have been able to do our QIP, where we raised 475 crores. We did our subordinated debt issue, where we raised 300 crores. So all of that has helped our CRAR ratio reach 26%, and that is today one of the best in the industry. And I think that gives a lot of confidence to our investors. So going forward, immediately we don't need any additional capital raising, but as our book grows, we will keep considering that.
Okay, and sir, will you take or get acquired by any lender?
Sorry, I couldn't. Could you repeat that, please?
Will you take or get acquired by any lender?
No, acquisition at this stage is not something that we are considering because we are in the process of doing our reverse merger. So the holding company will be reverse merged into the bank. And we have started that process last month, and we hope it will be concluded by September next year. So once that is completed, we can look at other avenues.
Okay, and sir, lastly, I would like to take your comment on interest rate. Where do you see rising and reaching rates?
I think the interest rate scenario is still expected to continue to go up a little bit for the next 6 months. There could be 1 or 2 more interest rate hikes. So we'll have to keep watching that. And in fact, the whole industry is watching that very carefully. And for the moment, it's very good for depositors. But eventually, I think the interest rates will begin to stabilize. But for the next 6 months, we are still in a